Good morning, good morning, good morning. I know everybody is filing in. We are really excited to have you all be a part of this conversation. My name is Danya Perry, Equitable Economic Development Director for Wake County Economic Development and Director of Diversity, Equity, and Inclusivity for the Raleigh Chamber. Thank you for joining us for our first virtual event on Opportunity Zones. Innovate Raleigh's Executive Director, Bridget Harrington, and I saw this as an important conversation for the drivers of our economic and innovation ecosystem, especially our entrepreneurs. The planning of this event is a true example of the collective thoughts, both private and public, to accomplish the vision of both organizations. Opportunity zones represent a breakthrough approach to community development. We recognize that opportunity zones, otherwise known as OZs, are a mechanism to support equitable economic development in communities through spurring investment. The purpose of this conversation is to not only understand OZs, but to also fully actualize their potential to create jobs, community wealth, and economic mobility. In short, we want to move from transaction to transformation. How can we maximize the power of OZs to ensure inclusive prosperity? Now, before we introduce our first speaker, I would like to thank Raleigh Chamber members, our EDGE investors, and our many partners for continuing to support this community and each other during this time. We also would like to thank our elected officials who have joined us today for their continued leadership. So during this event, let's stay connected. Join today's discussion on Twitter. Use the hashtag OpZonesWake, that's OPP Zones Wake, and tag us using @RaleighWake, @InnovateRaleigh, and @Raleigh Chamber. And please note, you will receive a recording of this presentation and blog recapping the event in the next few days. Now, today's event will feature a presentation on how Opportunity Zones can transform by founder and CEO of Opportunity Zone Consultants, Ashley Tyson. Now, you'll hear him, and you will also hear from our other thought leaders from the National Equity Fund, from Poynter Spruill, and also Partners in Equity to discuss how community, investors, and entrepreneurs can best leverage Opportunity Zones. You will then hear from several leaders in our community with UNC Kenan-Flagler Business School, City of Raleigh, and also the Town of Gardner. This panel discussion will explore the city and county-wide programs implemented to further support the utilization of Opportunity Zones. And at the end of the program, we will be answering questions from you. The entire lineup of speakers will be available for your questions. We invite you to use the question function, not the chat function, to submit questions at any time during the presentation. Now, I would love, and it is my honor to introduce you to our first speaker for today, Ashley Tyson. Ashley, would you please join us? I see you jumping on right now. Ashley is an experienced entrepreneur responsible for the founding and growth of numerous enterprises across a wide array of industries. As co-founder of OZPros.com, he has built a team that is uniquely positioned to handle the real estate, tax, acquisition, and securities nuances that are inherent in Opportunity Zone deals. OZ Pros provides real estate developers, entrepreneurs, and community stakeholders with a simplified process for learning about not only executing OZ strategies so that OZ capital can be put to work in the communities that need it the most, but he is also really passionate about helping business owners, big or small, be able to harness the value of Opportunity Zones. He has become a highly sought after expert in the Opportunity Zone space nationally and brings perspective as an entrepreneur, investor, and consultant. Ashley, thank you so much for being here. You know I have control and we're ready for your presentation.
Thank you, Danya. So I am going to go into share my screen now.
Excellent.
And I think that came up as the presentation view, correct?
It's
Okay,
the presenter
fantastic.
view.
Well, thank you, Danya. It is a privilege and honor to be here today amongst the experts that you've assembled to talk about opportunity zones. So like Danya said, my name is Ashley Tyson, and I am founder and principal of O's Opportunity Zone Consultants and ozpros.com. I'm a co-founder of that with Jimmy Atkinson, host of the Opportunity Zones podcast. We formed ozpros.com because we were passionate about putting the power of opportunity zones into the hands of small business leaders and in communities, and to educate them about what opportunity zones are so that they can actually do opportunity zones, so that they can take advantage of the program and utilize it in order to advance their goals, as opposed to having it affect them. And so we've partnered with a group called Crowd Create in order to better get that message out, and to make sure that we are harnessing and applying capital, attracting capital, and coordinating it with community resources so that it can go where it's needed the most.
And Ashley, before you get started, I just really want to come back and make sure that we have your presentation view corrected, because I know you have a lot of good information. Right now, it looks like it's in presenter mode.
Oh, okay. So I'm showing the wrong screen, correct?
Yeah, I think it's backwards. We can see your notes.
Yeah, there you go. Right. So here, let me.
And they're great notes, by the way. Don't get me wrong.
My script, right? You guys don't want to see that. Well, that's not the right one either. Sorry about that.
No, you're fine. You're fine. Yeah, we're getting there.
All right. How about that?
All right. There you go.
All right. Perfect. All right. So what is a qualified opportunity zone, and where are the qualified opportunity zones? So they were created under the 2017 Tax Cut and Jobs Act, and to stimulate economic development and job creation and incentivize long-term investment in traditionally underinvested areas. So there's 8,760 designated qualified opportunity zones, and I'm getting my laser pointer out here so that you can see. And what happened was that the governors of each state and territory got to designate up to 25% of their low-income census tracts as opportunity zones. And as you can see out here in the West, because it's a census tract out in the West where it's less densely populated, those tracts are going to be bigger. Similarly, out here in the east part of North Carolina, I think that all of Hyde County is an opportunity zone. And then when you get into the more dense census tracts, obviously they're smaller. So they're all across the United States and into the territories, including Puerto Rico, which pretty much the whole island is, and in the Virgin Islands. All right, so let's talk about the 3 benefits of opportunity zones. And I'm going to go through this stuff pretty fast because I really want to get into the why of this. So I'm going to go through the what and the how. But I think that the biggest thing that we're here to talk about is the why and what we can do with them. So the first is temporary deferral. So if you get your capital gains into a qualified opportunity fund within 180 days, you get to defer taxes on that gain until December 31st of 2026. So don't discount the time value of money of that deferral and being able to invest what you would otherwise be paying in taxes. It's really significant. So that's the first benefit. The second benefit is that you get a step up in basis when you go to pay those taxes on the original investment. And so if you're invested by December 31st, 2021, then you get a 10% reduction in those taxes. And so all of these benefits were effectively designed to try to get capital off of the sidelines, out of the stock market, out of appreciated stuff, and into the opportunity zones. And I got to hand it to them that they actually did a really good job in 3 pages of legislation in doing that. Some pretty creative ways. But the third, and this is probably the biggest benefit, is it's a step up in basis to fair market value after you've held your investment for 10 years. And what that does is not only completely eliminate capital gain, but it also eliminates depreciation recapture. And so once again, I got to hand it to the the folks that that drafted this. that they were, in doing these 3 different incentives, they were, number 1, able to encourage capital to get off the sidelines, but then number 2, to make it be patient, and then number 3, encourage it to go into stuff that's going to have high depreciation associated with it, so that way, when you sell that stuff on the back end, you don't get hit with that depreciation recapture. So let's talk numbers on this. So if you got $1 million of gain and you were to just take that gain and pay taxes on it, you would have a net $762,000 to invest. But if you go in opportunity zone, you have a full $1 million to put to work in the areas that need it most. So when you go to pay the taxes in 2027, you will ultimately pay $214,000 instead of $238,000, which is an immediate 10% savings, right? So you got the 10% step up in basis. But then in year 10, when you go to pay it out in full, it's going to be, and I'm going to show you the numbers on this, almost 54% higher than a normal investment. So as you can see, it's definitely has the ability to get the attention of folks that are looking for a return. So let's talk about the how, like what you actually have to do. Once again, I'm going to go through this quickly, and this will be distributed within the presentation that Danya's going to send out after we do this. But you got to have a capital gain. Now, query as to why you only can invest a capital gain, but right now it's only investment of a capital gain. I'd love to see an amendment to this to where they allowed non-capital gains to come in, and obviously you wouldn't get the benefit of deferring the taxes on it. You would need that, and or a reduction in the taxes. But if you could allow non-capital gains money to come in to get that step up in basis to fair market value, I think we'd see a lot more money coming to the table. And then we could put some guardrails on that non-capital gains money would need to go into federal, any kind of program that's got some kind of federal attachment to it, right? That's been set aside for like affordable housing or LIHTC deals or historic housing or conservation preservation, that kind of thing. That would, but that's kind of a non-starter about what could be as opposed to what is. So you have to drop it into a qualified opportunity fund, and it's actually not that difficult to create a fund. It's basically either a partnership or a corporation that's specifically been organized to invest into qualified opportunity zone property. So the QOF's got to have 90% of its assets in qualified opportunity zone property. And one of the ways that we do that, and we do that really cleanly at the 90% level, is we drop that down into a qualified opportunity zone business. So you have a drop down entity that's a QOZB. And the QOZB is actually the boots on the ground. It's the company that's actually out there doing it. And this is really where we need to be focused from an informational standpoint and an assistance standpoint, because this is where the rubber hits the road. This is where change actually happens. This is where jobs are created. We need Main Street America out there hunting opportunity zones to say, man, I'm excited about this because it opens up doors. It opens up doors of cash from investors, but it also opens up doors of conversation like we're having here. It opens up relationships with economic development groups. It opens up relationships with investors. And so that's what we're here to talk about today, is about transformation from not just a return, but into relationship. So what do you have to do in order to be a QOZB? 70% of your assets have to be in the zone. 50% of your income's got to come from active conduct of a trade or business, which isn't that actually hard to meet. It's basically where your employees are. You got to have a substantial portion in intangible property, so you can't just set up a IP holding company. Once again, the drafters were really good about saying, okay, we're going to put some stuff in here to make it so that you can't just use this as kind of a financial play. We want people actually doing stuff in the zones. Similarly, you can't have it be kind of a financial services company because you've got a non-qualified financial property cap. And then you can't have any sin businesses, which a golf course is a sin business, but then like off-premises alcohol consumption, that kind of thing. So just be wary on the lookout for that. So then this business has to have 70% of its tangible property, and that's just tangible property. So that's not intellectual property or goodwill, that kind of thing. but it's got to be used in the business and it's got to be acquired after December 31st or leased from an unrelated party. And it's got to be originally used. So if it hasn't been used in the zone before and you move it into the zone, that'll work, or it's got to be new. And 70% is in use in the opportunity zone for 90% of the time that the opportunity zone is in business. All right, so let's talk about documentation steps to start a QOF or a QOZB. So like I said, it's a partnership or a corporation. So an LLC will actually work. You just got to make sure it's taxed as a partnership, which all you have to do is just have 2 members. And then you need some kind of language that says that it's going to comply. That's one of the requirements for certifying a fund. And you can do that fairly simply with a simple set of resolutions. QOZB is the same way. You set up either a partnership or a corporation and you have that same kind of language. Then you need to trace the money coming from an investor with a capital gain down into the QOF, down into the QOZB. And then you need to have a 31 or 62-month business plan for deploying capital so that way you have a working capital safe harbor for the cash that's coming into the deal. And then you really should have an audit trail compliance plan as well, so that that you can ultimately, if you get audited, you can show the IRS how you complied with all of the rules that I set forth on that previous page. So that's actually one of the really cool things about this program, is that there's no approvals up front. It's basically you go and do it. Now you have to comply and you got to make sure that you do it correctly, but ultimately you're creating an audit trail. So in case you get audited, you can prove that what you did was correct. And so it's a significant advantage because it allows people to get going with things fairly quickly and easily. Like I said, it seems complicated, but it's really not, right? So we talked about the formation and your audit trail. Now, if you're going to raise money and if you're actually going out to look for raising money, you're going to need to comply with securities laws, because by very definition, an opportunity fund is a security. We're not going to get bogged down with that, but there's actually some really cool stuff that's happening within the Jobs Act on increasing the limits for crowdfunding and the opportunity to be able to harness crowdfunding up with traditional securities offerings. So let's talk about the why. Simon Sinek said that you always start with your why. I started with the how and the what, but let's talk about the why. And the why is transformation. So that's a thorough or dramatic change in form or appearance. And it's the process of shedding the old outer covering and putting on the new. True transformation begins in our minds with a choice that we aren't going to continue to do the same thing, but we're going to change. We're going to do something different. So governments, institutions, religions, masses, movements have all started with a choice, a single conscious choice that led to a change that sparked radical transformation. So opportunity zones offer transformation through hope. So they were created through bipartisan legislation to align private capital with impact investing. Now, so there's a lot of things in the legislation that I'd like to change, as I'm sure there are out there that are on the webinar, things that you'd like to change. I actually mentioned a couple of them, but the key is that it is the first program that we've seen that's gotten traction in getting capital to move from where it is to the places where it's needed to be, and then to incentivize it to stick around for 10 years. Once again, I got to hand it to the drafters that they were able to accomplish what no other tax incentive program has done. It's gotten interest. It's sparked conversations. It's sparked that crucial ingredient that's necessary to have transformation, and that's hope. Qualified opportunity zones have brought hope to communities that have been in downward spirals for decades, fighting a losing battle against poverty, population loss, the opioid epidemic, aging out business owners. But with hope, they get renewed energy to get back in the fight and to persevere in the battle, to go about transformation for their communities, their businesses, and ultimately their own lives. Never underestimate the power of hope. Let's talk about transformation through access to resources, because that hope has brought a new zeal to unifying resources that have previously been disjointed. So at the national level, the White House Opportunity Zone and Revitalization Council was to establish to amplify the impact of the Qualified Opportunity Zone incentive by attempting to better coordinate available federal resources specifically for qualified opportunity zones. So I don't know if any of y'all have read that report, but for me, it was like a yellow pages of all of the available federal programs that are out there that I didn't know existed. There's all kind of databases. There's all kind of ways that you can find this stuff. But when you don't know what you're looking for, you're never going to find it. And so this was like a roadmap for me that just sparked. It was like, it's like ding, ding, like literally light bulbs going off in my head about ways that we could couple in grants with private capital or utilize grants in order to go after private capital in order to drive these programs and to make them more successful. So when we couple that up, when you couple up federal programs with private money, it can make impact investments that otherwise wouldn't get done. It wouldn't have a shot. And that's what this is all about. So let's talk about transformation of communities. So like I said before, opportunity zones have been the spark that's ignited a fire. In some communities, that fire is a lot hotter than others. But I've seen numerous states and local municipalities go after and get federal grant money and or create their own incentives. And even if they don't do that, to just coordinate resources that have otherwise been disjointed in order to be able to get in front of people that they otherwise would not have without the program. The key is that people are talking to each other. They're talking about what they can do to transform their communities. They're talking about what they need. They're talking about what they want. They're talking about ideal solutions, and they're doing it amongst the government groups that are out there and the private capital guys that are bringing the money. And then they're looking for ways that they can tap federal incentives to bring capital to the areas that desperately need it. So let's talk transformation of investors. So in order to get investor, let's face it, investors, they're a lot of times all about the money. And so they want a return on their investment. And that's the great thing about this program, is that it allows for you to be able to give them that, right? So let's give them what they want, but then let's give them what they need. So the tax advantages are the hook, right? So they've created this buzz, and people are now looking at these types of deals that they normally would not have been looking at. And so make a deal investable, make it so that it's got a professional presentation, make it so that it looks sharp and that it can get an investor's attention. But then once you have their attention and once you have their dollars, structure the deals and investments to get their presence. Invite them in, even if they're not investing, even if they're just coming to look, invite them in and show them what you're doing. Show them how you're making a difference, because presence leads to understanding. Understanding leads to relationship, and relationship sparks transformation. So let's talk transformation through execution. The time is now. We need small business explosions and opportunity zones. So we've got to keep talking about it and start doing something. We got to make it happen. So I don't know about y'all, but I'm a huge Tony Robbins fan. And I think that's probably maybe because he's 6'7" and I'm 6'8". And so we got that whole kind of tall guy thing going. If anybody knows him, let him know I got an inch on him. But one of his quotes is that lots of people know what to do, but few people actually do what they know. Knowing is not enough. You must take action. And that's what we've got to do in order to make this program effective, in order to make this program truly have the impact that it has the potential to have, which is massive. That means you and that means me, have to take action. We've got to get off the bench and get in the game. We need to learn about qualified opportunity zones, but then we need to do something in the opportunity zones. We need to create QOZBs that create jobs. We need to help people get in front of investors. We need to get the capital to work. And then we need to shout it from the rooftops. We need to talk it up. We need to let people know that this thing is actually working. It's actually catching fire, because when we do that, it starts and it continues the conversation, and it takes that spark and it channels it into a mighty flame and a mighty fire that has the ability to truly transform. So you've got the opportunity to make an impact. So make the conscious decision to be a part of the transformation and go make it happen today. Thank you, Donna. I'm going to turn it back over to you now. and let you roll on. Danya, do you
Wow.
have it?
Yeah, Ashley. Wow. Thank you so very much, man. I think we could have listened to a little bit more of you. I think you are uh, certainly motivating. You're definitely passionate, and we really appreciate your fantastic presentation. I'm not gonna tell Tony what you said about him. Uh, but we really appreciate you. You know, you gave us an overview, an incredible overview of OZs, and it's such a complex, conversation, but you really laid it out in a real plain way. So we appreciate that. We also appreciate you providing a construct and how it can transform communities and how critical that piece is, and also connecting the importance of small business expansion in these zones. So we appreciate it. What I'd like to do, and we'll definitely bring you back, Ashley, at the end to answer questions from our audience. But I'd like to also right now introduce our panelists for our first panel. So Karen, Charlie, and Napoleon, please turn on your cameras and join me. I will start making quick introductions. So we have Karen Propensi, who is the Managing Director of Special Initiatives at National Equity Fund, Inc., where she is working on new programs, including opportunity zones and policy initiatives. Over the past 3 decades, the National Equity Fund has invested more than $16.75 billion revitalizing neighborhoods, fostering economic growth, and creating affordable, sustainable housing. Karen, thank you so much for being on our panel. We also have Charlie Davis, who is an attorney with Pointer Spruill LLP in Raleigh. Charlie advises clients on tax and non-tax issues related to estate planning and structuring mergers and acquisitions. His expertise is in the intricacies of opportunity zones, make him a valuable resource to our community. Charlie, so great to have you on the panel. And lastly, we have Napoleon Wallace. He is the co-founder of Activist, a social justice research and advisory firm, and also Partners in Equity North Carolina, an investment fund focused on supporting owner-occupied commercial real estate for minority and women-owned businesses. With more than 15 years of experience in finance and community economic development, Napoleon has led and supported numerous successful impact efforts within private, public, and nonprofit sectors. As North Carolina's Deputy Secretary of Commerce, Napoleon led the designation process of North Carolina's 252 opportunity zones, collaborating and coordinating with communities, economic developers, and also investors. Thank you all for being here, and I'm really excited to jump off this conversation with a first level set question. So I want to give everybody an opportunity to talk about your current engagement with opportunity zones. There's a lot of diversity on this panel and a lot of diversity in thought and utilization. So I'd like to just start us off. Now, Karen, will you start us off with that? Tell us a little bit about
Sure.
your engagement.
Glad to, Danya. So as most of you guys are probably aware, National Equity Fund is one of the largest syndicators of the low-income housing tax credit. So our mission is really to look at affordable housing in communities across the country. When the Opportunity Zone program came into effect, we started thinking about how can we really use this program to do something different? Because what we were not as interested in was pairing it with the low-income credits, because we feel like there's a really good group of investors that do that. But how can we take this program that could bring in other investors, but also allows us to maybe expand the limits on affordability? So what we decided to try to do was to create a program doing workforce housing with opportunity zones. So trying to focus on developments where the majority of the units would be at 80 to 100% of the area median income, kind of that next stage housing. We still think that this is a program where this could work really well if we can really find the dynamics to make it work. I think what we have focused on is at this point in time is we have been working with some CRA banks who are used to doing housing and are used to real estate, who have to, in order to invest their capital gains, have to have 50% of the units at 80% of AMI. So we have just finished a fund with Fifth Third Bank, which had been announced previously, but they really were looking at trying to do this workforce housing product. So, and it works with a CRA bank willing to take a lower return. I think we'll get into this on the next couple questions, but I think if you really want to try to make this program work and target units that are more affordable, then having a bank which works with CRA, which is used to taking returns, which are not double digit, let's just say that, so under 10%, and they have a focus on really wanting to make a community social impact. I think it can work really well. So we've worked with them and are placing about $10 million of their $25 million into workforce housing, 2 projects, both of which have 50% of the units for people at 80% of AMI. And make this happen, you have to have communities really come to the fore, and we'll talk about that in future questions that we're going to be discussing on the panel. But that's where I really focused. I also wanted to say we have also been trying to reach out to family offices to try to grow and expand who is going to invest in community development. And that's been a really interesting, an interesting process, as we have found that a lot of family offices want to invest in opportunity zones. I think that they're not used to investing in moderate income housing. They want to have higher returns and they want to be with bigger developers. And so we have to continue to educate them to get them to help us do what we think this program should be doing in communities. So that's what we're up to, Danya.
Oh, wow. That's amazing. That's amazing. And I know that you know, with your expertise in this space, and we'll get a little bit into the nuts and bolts of you know, how are you using that tool in that respect. Now, Napoleon, kind of give us a little bit of the flavor from Partners in Equity and the work that you're doing.
Yeah, absolutely. So, you know, as you mentioned earlier, my first really entree in opportunity zones was when North Carolina moved to designate the opportunity zones in our state. A large part of my work while I was at the Department of Commerce was working with cities, communities across the state to try to figure out like what are the right areas, what are the right, you know, biggest opportunities for investment. I think at the time, the way that we talked about is what areas had the most opportunity for capital absorption, and you know, really relied on that to help designate some of the areas. Since then, a lot of my work has been, as you mentioned, with this group, Partners in Equity. So the heart of Partners in Equity comes from a really sort of basic sort of tenet for the investment market, namely that, or the lending market, namely that if you are a small business owner and you want to buy your property, it isn't like you're buying a house. You know, house, maybe you have to put 5% down. For a business, if you want to buy a commercial property, you have to put 20% down. As we know, the wealth gap has some pretty serious ramifications on race or racial lines when you look at, you know, who's able to bring that amount of money to the table. One of the examples that we like to give, and I won't give a name, but is a small Black-owned coffee shop in the Durham area that's been around for a really long time, was really excited about buying their property in downtown Durham. But with all of the development and other revitalization that was happening, they were being priced out of the market. And they were a really quality company, able to show up with $100 grand in capital to be able to put towards a property, which is no small amount, at least not for you know, for me and for us, no small amount. And what they ended up having to do was they had to really negotiate hard, because if they had put $100 grand toward the down payment of that property, they would not have had the opportunity to be able to continue with working capital. They need that capital for other things. And so what we found is there is kind of this gap where if you are able to show up alongside business owners with down payment assistance, as we call it, and able to kind of help them and support them in their purchase of a property. We're able to expand the credit box for a number of businesses that are trying to buy their property, especially in the current market. And we're also able to really expand to make sure that businesses of all types have the opportunity for ownership, growth, wealth creation, job creation, all those sorts of things. And again, the way that we pair that, we're just talking about family offices. We do have a number of bank partners that we work with where we'll work alongside them, be able to bring about, their deal flow. So deals that might otherwise not fit into their credit box because there is a down payment amount. We're showing up with a little bit of capital alongside a business owner that wants to buy their property and able to put a little bit of extra capital into the deal, responsible capital, not being, egregious or really being taxing them too hard. But we have a number of the folks that have invested in us. We have a number of family offices that not only see this as a great way to expand their presence in communities of color and opportunity zones, but also see it as a really great way to have a deep impact in certain communities, as well as get a quality return.
Mhm. Wow. And I love the range that we're having right now, just between Karen and Napoleon, just talking about the different ways to transform the community and provide the support around inclusive prosperity and equitable growth. And also, I appreciate your remarks about your work with over at the State Commerce. I've actually included in the chat a newly launched page that Wake County Economic Development has on opportunity zones. Check it out. But it speaks to and has a link to NC Commerce's page that talks about the process and the criteria for the identification of those zones. So please check that out when you have time. Charlie, how are you doing, sir?
I'm doing all right. How about you, Danya?
Doing great, doing great. Last but not least, to kick off sort of our conversation about your current engagement, tell us a little bit about your perspective and some of the clients that you're working with. What's going on over at Pointer Spruill?
Yeah, so again, I'm Charlie Davis. I'm an attorney at Pointer Spruill in Raleigh. We have a fairly full service law firm. We have a substantial M&A and business practice, and so opportunity zones have fallen into that over the last couple of years. We have done a significant amount of education. So we've put on seminars for the last couple of years on, educating our clients and other people in the public about, the benefits of this program, and then sort of the nuts and bolts of getting it done. Ashley mentioned this in his introductory presentation, but this program has huge potential that I don't think is quite being tapped into yet. But it's got huge potential and could be a huge benefit to our clients and other members of the community. So we're doing a lot of education work. I have advised a lot of clients on the program and potential tax benefits. I have helped brainstorm and sort of determine if the program would be feasible for certain clients, whether a client can actually participate directly in the program. I can't tell you how many conversations I've had with people who have had property in an opportunity zone before it was designated as a zone, trying to figure out how they can take advantage of the program. And unfortunately, it's not very easy and sometimes almost impossible to directly use that property as an owner prior to 2017. But there are some ways you could potentially structure it, which we can talk about, but it would be very hard to do that. So I've had lots of conversations about that. But I've also helped a lot of clients set up funds and qualified opportunity zone businesses. And so we set up some very small ones. We set up some very large ones as well. And then we've also done a lot of advice on just ongoing compliance issues. And so, now that the fund is set up, what happens now, right? And so we've done a lot of advice on that. I mean, a lot of that's just general business advice. There are certainly opportunity zone facets to it that they need to be aware of and keep up with. But it's also just general advice about what do they need to do to continue complying with the law and to run their business successfully. And so we've done, all facets of the Opportunity Zone program. We have advised clients on and educated the public on. So.
Oh, this is great. I love it. I feel like we have some good synergy of ideas and thoughts. And I'd like to launch that. And Napoleon, I'm going to start with you. Let's launch that and just sort of dovetailing from what Charlie was talking about. Let's vision here for a bit. How can these OZs be transformative in a community? Bearing in mind that, the intent is to help our most vulnerable communities, to help spur investments and growth in our most marginalized communities. So, kind of give us your high level thoughts and overview about OZs and that being such a transformative tool. I think you're on mute, and I want to hear your lovely voice.
I am. Thank you for the heads up, and thank you for the compliment. I greatly appreciate that. I mean, one of the things that I think this is really just a fundamental struggle of the program, but does present some really great opportunities for how we're thinking about it. So, right now, nationwide, in every community, we're having this debate, whether it be around, places, social justice, all that stuff. But a lot of it, in many ways, comes down to property and people, right? So that real dichotomy of like, how are you choosing to invest? As you know, Danya, my background is a community developer with self-help and the Kresge Foundation doing direct investments in communities nationwide. And one of the things, we've really had to think about, I've thought about over the years has been, when you're investing in a community, in what ways are you investing in the people that are there, or in what ways are you investing in the property that is there, right? And Opportunity Zone as a legislation, not going to call it a program because it's not quite there yet, but as a piece of legislation, really lean on the property side to be able to affect change and impact in communities to help people. And I think from our end, the way that we've been looking at it is, if we agree that the real intent is to be able to support people, be able to grow communities, a priority of this job creation, which isn't currently in the legislation as a mandate. It isn't like new markets or anything like that. But that's not there. It really is focused on people. I think we have to be very thoughtful as, practitioners in the market to try to figure out what are the ways that we can make property investments that truly have a catalytic impact on the people in the community. So Cam was just talking about, workforce housing, right? Like that is something that is very aligned where you're investing in a property, but the true beneficiary of that are going to be the residents that are in that community or around that community. For us, the way that we've looked at that is we see a very large pipeline of owner-occupied commercial real estate deals or other real estate deals. And we believe that there's a market that is effectively locked out of that along racial lines. The estimate that we, kind of our best estimate right now, if you look at the SBA 504 program, which is the largest and most transparent, owner-occupied commercial real estate, program that we can see at a loan level. What we know is that, of the many billions that in deals that are done every year, only 1% of those go to Black businesses, and only 9% of that goes to women. So when we look at that, we see an opportunity, if we know that one of the critical sort of levers of participation in that market, which I'll say the SBA 504 market might be the most equitable path of access for owner-occupied commercial real estate, given that you only have to put 10% down in most cases. And even that still isn't quite what we want it to be in terms of participation. We know that. We're trying to figure out, all right, how do we participate in those markets? Large existing pipes, large structures that have been around for a really long time, where the intent is very much aligned around the creation of wealth, creation of jobs, creation of access, ownership and, business benefit. If we know that, how we find the ways to tweak and lever those markets using this new transformative tool that we have, the form of opportunity zones, to really be able to make them equitable, more accessible, and I'd say just more emblematic of what the original use or the original purpose of those programs were. And so that's really the way that we lean into it.
Yeah, I love that. And basketball season is now upon us, and we're back on sports. So that was a great alley-oop to you, Karen, if I could be a little corny, because, you know, Napoleon really squarely focused in on, I think, two key areas that, you know, full participation and inclusion, and also it being people-based. And it sounds like, Karen, you know, some of the work that you're doing, you know, you really have people in mind, you have upward mobility in mind. You know, talk a little bit about the work of the National Equity Fund and sort of that perspective of transforming, you know, with people in mind when you think about the affordable housing piece.
Well, I think you're right. Like doing workforce housing was the whole idea, was kind of like that next step housing, right? So one is that how do you, people who live in these communities that now maybe are making too much money and can't get into the tax credit housing but want to stay in their neighborhoods, right? Or that's the kind of, that's why we were thinking, that's why workforce housing would be great in these neighborhoods, to keep people there, grow that community, and have ability for these communities to have multi-income levels of housing without it going high end. Because I see so much of opportunity zone investment dollars right now going into high end housing, right on the edge of communities closer to downtown. But the idea was, how do you get it to really benefit more of the communities that I think the program was meant to benefit? You know, Danya, one thing I want to say is I think one of the big challenges with opportunity zones is getting the right investors there, because banks don't have a lot of capital gains, and they will definitely invest in these communities, but they don't really have the dollars. That's not what they do. So Napoleon was talking about, again, the family offices do, but how do we get them to look at these communities and the types of products that we want to have happen in these communities? But I think the other big thing might be how I think there's a real chance for small developers to bring in friends and family to do stuff in communities. And I think we're seeing a lot of that happen. A lot of it does happen. Maybe Charlie can talk about that too, because you can put together a fund pretty easily, right? And you can bring, if you have a deal that needs like $2 million of equity, you can bring in a couple of friends and family investors and set up your own fund and make that happen. So maybe you can help with a small business, or we have a developer in Chicago that, you know, he just needed $2 million. We couldn't help him, but he had friends and family, and he went and he was able to take found a building that he could acquire that met the ozone requirements, that needed a gut rehab, and he's able to do that, which he wouldn't have been able to do before. So I think there are those opportunities that we can figure out how to structure those. So I think that's something that could happen.
Well, Karen, you know, keeping the corny basketball references, that was a great assist to Charlie. Charlie, you know, when you think about, you know, those right investors, when you think about the friends and family, you know, it seems like there's opportunity in opportunity zones. You know, what are some of the I guess the folks that are doing it well? You know, what are some of the things that you've seen? What are some cautionary tales? You know, give us some sort of some examples of what's going on out there that you've been exposed to.
Sure. So I think Karen's right. I think those smaller deals are fit within the program very well and are very manageable. I think one of the things that investors don't realize, they hear about these great tax benefits, but then they don't realize at the get-go that this is unlike some other programs that have happened before, or unlike other investments that they may have done in the past. And it really takes a hands-on approach to make sure you fit within the rules well. And so those smaller deals can do that a little bit better, I think. Family offices are a great example. I mean, I think they are well suited to do opportunity zone investments because they can kind of manage the whole thing themselves. I think so. One of the issues that large funds have had is just the regulation that they have to follow is more than they're used to having to do, and so they're hesitant to jump into the market. But family offices, these smaller deals, really do fit well within it. With that being said, I think the large deals can certainly happen and are happening, but it just takes a lot more forethought. Before you get into it, you need to make sure things, your deal is set up correctly and will work. You don't want to get into the deal and find out that you've misstepped along the way, and now your investment doesn't qualify anymore. And so that you just have to make sure you dot all your I's and cross your T's beforehand. And so those smaller projects, it's easier to do that with those, if that makes sense.
Mm-hmm. No, absolutely. So let's kind of think about. We have about 10 minutes or so. Really quickly, how have you seen? I mean, when we talk about we're currently, navigating a pandemic. Has OZ utilizations changed or been impacted since we've been dealing with COVID? And what do you anticipate sort of post-COVID? Now, Napoleon, do you have any thoughts about that? What's sort of your visioning for the future?
Yes, I mean, I feel like COVID has turned every investor into armchair epidemiologist, so I'm not going to go down that route. I know I've fallen into that before, so I'm not going to fall for that one again. What I will say is, what I will say is that, thinking about what this recovery is going to look like, we don't know how quickly it's going to come back, right? There are lots of folks hoping for a V-shaped recovery. We don't know that that's really the case. There are a lot of folks hoping for a U-shape. We're not hoping, but thinking it'll be more of a U-shape, or it could be even longer, right? And so I think from our perspective, the way we've been looking at it is you're going to have to think in the long term. You're going to have to think about, development opportunities, community revitalization, really engagement of the small business sector in a way that looks at over a longer period of time. And fortunately, opportunity zones, as Ashley mentioned earlier, they're a very patient capital source, right? So you're looking at a 10-year horizon before you're looking at getting your returns back. Not going to say it's the best fit. I don't think anybody wants to wait on a 10-year, got a long horizon. That's obviously got what we need in a lot of cases. So it's good to have that capital. But I think the thing that, we're really trying to, or that's worth noting is having that patient capital very clearly sort of articulated that it's going to be there for the long haul, allows businesses as well as communities to think about their development in a different way, allows them to take risks that maybe they weren't willing to take before. I'd say in the current environment, which is perceived to be a little riskier than other environments, making sure that you're investing or saying that you're investing in real estate or equipment, long-lived equipment as an asset class is something that is paired well for the recovery, we believe.
I love that. And Karen, hearing what Napoleon has sort of, provided us, what's your take on it? Is it for you? Are you, what did you call it, Napoleon, a side chair epidemiologist? Is it,
armchair epidemiologist.
Armchair. Yeah.
Well, Karen, from your take, not being an epidemiologist, but certainly being community centered, what is your take about the impact of COVID and the direction and utilization of some of the projects you're seeing and working on?
So there was a study done by the Economic Innovation Group that I think is on their website that kind of asked a lot of the investors how COVID was affecting their funds or affecting their ability to invest. And what they found, there was a slowdown initially, but now people are back to being interested in investing. And we actually have some developers telling us who have projects that are more in secondary markets, not the big cities. And but they're seeing that there's people are starting to move to more secondary markets. So there may be more interest in investors to invest in those deals in those secondary markets that they didn't see before. So secondary cities, I would say. And in general, I think that there's going to be more of a need for affordable housing, more of a need for business investment. So if we can, with what's happening with COVID, so there's opportunities there actually to try to figure out how to invest if the dollars continue to come. One thing to think about if, you're thinking about the future too, Danya, is what will happen with this program? Will it be renewed at all? Because that would be important, I think, post-COVID to have some kind of renewal. I think a lot depends on who comes into office in November, and the potential for us to kind of have some ability. I think all of us have ideas of what can be changed in the program, maybe some additional targeting, some additional incentives to help really make this work in inner city areas more so, or in more secondary markets where we haven't seen as much investment, I think, as we'd like.
It seems like there's going to be a balancing act between, there's so much uncertainty, but there's still a lot of optimism, what this could,
right.
what could use. Charlie, kind of thinking about that, can you lead us into sort of this final charge or advice that you would give, investors, entrepreneurs, property owners, recognizing that, the intent of our OZs, and I always we need to continue to stay entrenched in the intent and the purpose of it. What would you launch and how would you, sort of counsel or provide counsel as a counsel, no pun intended, to our investors, property managers, and entrepreneurs?
Right. So for investors, I would tell them, I'm biased in this opinion, but they need to see an attorney to set these things up. I mean, the steps are not always intuitive. They don't have a lot of logic behind some of the rules, and it is very easy to do something wrong. And so, for instance, one example, Ashley mentioned this before. Your fund and your qualified opportunity zone business need to be set up and in their articles and in their public filing, it needs to say that they're designed to or for investing in opportunity zone property. That's easy to do. What if you forget that? What if you just set up an LLC or a corporation and then you buy the property? Can you fix it? Right? I mean, so that's an example of an easy thing, an easy mistake to make that could cause huge problems. Now, there's no guidance from Treasury as to, a very small misstep like that, whether that would, make it so that you can't take advantage at all of any of the benefits. But that's one thing that needs to happen. And if you have an attorney advising you, it should happen, and it probably will happen. And so that's one thing I would tell them. Another thing I would say is, look, don't let the tax tail wag the dog. The investment you're going to do has to be something that's going to work. And so, yeah, there aren't that many deals, I think, that the tax benefits will push them over the edge from this is a good idea to this is, or this is a bad idea to this is a good idea. So make sure what you're doing is going to work, and then the tax benefits are great. And maybe they would, maybe this is a deal that would probably work, but you wouldn't be quite as interested in because your return wouldn't be as high. But now the tax benefits offer a greater return, right? So that's sort of, you need to make sure it's going to work. And then for entrepreneurs, reach out to funds. Funds are on the internet and they are, publicly stating their intention to invest in opportunity zones. They're looking for projects. If you're an entrepreneur, and you're looking for some funding, reach out to them. I mean, this is a great source for startups, particularly non-real estate based businesses. Park your headquarters in an opportunity zone and get funding from outside sources. That might be a reason an investor will invest in you that they otherwise, might not. So be on the lookout for funds that are looking to invest in operating entities.
This is great. Listen, Napoleon, can you give us from Partners in Equity of North Carolina sort of high-level advice for investors and entrepreneurs?
Yeah, I'd say, as a entrepreneur, when we, and so this is going back to the days of the state, but when we set aside the zones and pick them, we pick one in every community, right? So every county has an opportunity zone. Some have more than others, but what we found is that there are deals in every county. And I think, the advent of COVID, as well as, the economic fallout, that does mean that we're facing some additional headwinds. But the core opportunities, the core need that we saw in communities statewide is still there. And so I'd say for entrepreneurs, they're already working in these spaces, really dig in and find ways to be able to use this, as well as a plethora of other programs, be able to continue to deliver value to the people in your community. Obviously, this is through the property. We're really trying to focus on the people. And then I'd say for the investors, the opportunities are here in North Carolina, especially in the Raleigh Triangle area. I mean, as we know, there are a number of opportunity zones in the Triangle area. As Karen mentioned, the sort of designation of large cities versus maybe another sort of secondary tier cities. Raleigh, whether it be growth, whether it be capital expansion, whether it be business expansion, all of those things are coming along well, as well as we have a number of anchor institutions, be it the universities, the hospitals, or any of the other sort of anchor organizations in the area. So I just say for investors, the deals are there, happy hunting, as they say. And for the entrepreneurs, really try to dig in and find the best ways to get the most out of this, as well as other programs to deliver a need for the communities that you serve.
Outstanding, outstanding. This is such great advice. Karen, you are going to close this panel with some amazing advice. And you are from Chicagoland, a great sports town with the most amazing football team in my mind. I'm a Chicago Bears. So
Okay.
I'm still at the 1985 Super Bowl. So give us your perspective. How would you like to? What charge can you give us to investors and entrepreneurs and property owners alike?
Because I was kind of thinking about the last things to say. Besides, I agree with Charlie. Like developers, make sure you have a good accountant, attorney to help you get started on this, because it's there. As we delve into this, the rules, while they were straightforward to start out with, have gotten complicated through all of the revised regulations. And the wording is a little, difficult to understand initially, but then it starts making sense. So get yourself some good advice to get started. Developers, entrepreneurs, I want to say pair up with your cities and your localities to find out what they can do to help you make these things happen. What sites they want to see occur. Maybe there's some vacant land that you can get for, that a city wants to get rid of, wants to use for the right purpose, that they can help you buy for an inexpensive amount of money that will help you to target lower income rents or help you to target more jobs. Maybe there's some ability to use CDBG monies in the cities to help with, helping with site improvement work. I'm just thinking about cities, working with your cities, see if they'll help you because you're in an opportunity zone to try to expedite zoning or permitting, because the federal government is trying to do that as well with its federal programs. So really reach out and try to partner and find all these ways to make opportunity zones work, for a social impact purpose by pairing up with your localities. And investors, I would say, realize that there are a lot of very good proper projects in these opportunity zones, and we may not have developers that have the deepest pockets, but they have a lot of mission orientation, and there's a lot of people want to make this happen, want to make it work. So take a look at these projects, even though they may be not at the highest returns, but they're going to provide good returns, and there's a good ability for these projects to appreciate over time. So I would really like to see more investors try to, as Napoleon said, take a look at these cities, what's happening there. A lot of growth is happening in these secondary markets, and a lot of good upswing in employment and continued growth. Even during COVID, we're seeing that happening in a lot of markets.
Absolutely. No, that Karen, that was a slam dunk. Give it up for our entire panel. Truly appreciate your expertise. Karen, Charlie, Napoleon, appreciate your input in today's discussion. Again, we'll try to we will bring you back. Napoleon, I know you have to leave us, but please, everyone, Napoleon has left his email address in the chat so that you can connect with him if you have any specific questions. From your conversation today, we were able to see how OZs can be leveraged to support goals of transforming communities, from supporting small businesses and entrepreneurs to overall economic mobility strategies like affordable housing. So the conversation also noted because of the COVID-19 pandemic and so much uncertainty in what's to come, there's still hope and optimism that OZs are well suited for this current environment. So with that, I'd like to transition. I'm excited to bring to the microphone my brother, Michael Haley. Michael's Executive Director for Wake County Economic Development and also the Senior Vice President for the Raleigh Chamber. Michael, I'll turn it over to you so that you can kick us off to our second panel.
Well, thank you, Danya, and I appreciate the abundance of sports analogies during this conversation, for sure. Thanks, Danya, and thanks to our panelists again, Charlie, Karen, and Napoleon. What a great way to start us off, building on what Ashley had offered for us. So I'm really excited about our next panel of our day. And Karen hit it at the end. Karen noted that it's so important for investors and others looking to make an investment in opportunity zones work with their community, and that's what we're going to talk about next. So I'm excited that our second panel is really going to focus on how to utilize opportunity zones in Wake County and honestly in the entire region. So I'm going to introduce our panelists now. So if I could have Jeannie, Veronica, and Joe, go ahead and turn on your cameras and unmute, and you can join me. And a reminder to all of our participants, you can submit questions using that question function, and you're doing a great job of it so far. We're getting great questions in, and we're going to dedicate some time at the end for those to get those questions answered. So let me introduce our first panelist, Jeannie Milliken-Bonds. She is a professor of practice, impact investment, and sustainable finance at the UNC Kenan-Flagler Business School. Jeannie is leading a new initiative at UNC titled Invest to Sustain. This is to increase community and business capacity to enact social impact investing. Jeannie is the former senior leader in regional community development for the Federal Reserve Bank of Richmond. Our next panelist is Veronica Creech. As the director of the Office of Economic Development and Innovation at the City of Raleigh, Veronica and her team lead from a place of equitable economic development with the vision, prosperity for all. With a high value on partnerships, Veronica builds relationships with local and state government agencies, local business, nonprofit, and faith communities to fully build the scaffolding people and the economy need to reach Raleigh's collective and fullest potential. And finally, Joe Stallings. Joe joined the town of Garner as Economic Development Director in January of 2015. Prior to coming to Garner, Joe served as the Economic Development and Media Coordinator for the town of Benson in North Carolina. During his time in Garner, Joe has assisted in the creation of thousands of jobs and over $250 million in new investment to the community. And Joe played a very, very important role in welcoming the Amazon Fulfillment Center in Garner that is bringing more than 3,000 jobs and over $200 million of investment. So thank you to each of our panelists this morning. What a great panel. I want to, before we start questions, I'm going to reiterate a couple things that I heard. One, Ashley mentioned in his presentation, the why is transformation. And we're going to talk a lot about that. The three of you are going to lead us through that conversation. And then Charlie really emphasized the potential related to opportunity zones. And that's what I'm really excited about with this group to talk about. And again, Karen mentioned in her closing comments, the need to partner with our local community. So I think that's imperative. It's a part of who we are. It's part of the DNA of our community. So Veronica and Joe, I'm going to start us off with a question for you two. Just in general, how have opportunity zones helped drive development or even spurred new conversations related to development in both Raleigh and Garner? Veronica, I'll let you go first.
Great. Thank you, Michael. Can you guys hear me okay? Good morning. Yeah, thanks for the invitation to join you guys, and Joe and Jeannie, good to be on the panel with you. Thank you, and Michael, for facilitating. In the community of Raleigh, opportunity zones were identified along our BRT routes. One of the requirements to be considered an opportunity zone is that there was some amount of infrastructure or development on the horizon. Being with the local municipality, we knew that transportation infrastructure was being planned for and budgeted along the areas that eventually were identified as our opportunity zones. So it was kind of like a double positive here. We have the transportation infrastructure funding approved, then we had an overlay identified as opportunity zones, and now folks can think about some of those larger projects that we heard on the first panel: affordable housing, workforce housing, creating jobs. So two tangible projects that have come forward since the designation of the opportunity zones: the highly anticipated and very talked about Downtown South project. It's my understanding from the leadership there, John Kane, his team, Steve Malik, Billy Redmond with Trademark, that all their properties are purchased through an opportunity fund. So they have leveraged not only the opportunity zone, they've set up their fund, and that is a critical part of the investment in the area that we call Southeast Raleigh, in a highly underinvested area. There's an additional project along New Bern Avenue. There's a Tower Shopping Center along that corridor that is there's an active partnership in place looking at what could take place in that shopping center. And one of the assets for why the developer is looking at that location is the shopping center, many would say, is not at its highest and best use, and it's in an opportunity zone, and there are other assets, not just the infrastructure of transportation, close to a highway, eastern part of our city, really good access to other communities. So I would say there's two major efforts underway that we know about at the city that have been lifted up, or more interest because they're in opportunity zones.
That's great. Joe, what about, and those are really important projects, and it sort of feeds right into what's great about it is the connection to the neighboring communities, with the Downtown South. Joe, that's right there at the town of Garner. So how have opportunity zones impacted your work in the town?
Sure. Yeah, absolutely. No, the Downtown South project is just as exciting for us in Garner as it is for Raleigh. So we hope it goes well, not just because I'm a soccer fan, but what we have seen actually is something that's pretty positive, that the private development community has really stepped up to the plate and pursued opportunities really without us having to go out there and beg them to do so. And so we've got one currently that is a workforce housing project that is just now getting started. We too have seen our opportunity zones layer on top of future BRT lines or maybe even potentially commuter rail at one time. And about 2/3 of the town of Garner is covered in a opportunity zone. So that opens up a lot of opportunities, right, for developers to come in and find a suitable location if they have a project. I think three things that are really kind of interesting for us in the town of Garner is one, Mari Howe, our downtown manager, and I, about a year or two ago, started Garner's what we call a bridge space in downtown. Essentially, we took an old building and were allowing at this particular time, small tech companies to kind of scale up. And so we have this bridge space in downtown, which is in an opportunity zone, where you have small entrepreneurs coming in and growing their businesses up that, if they chose to, could take advantage and partner with those folks looking to invest in companies and opportunity zones and spin them out and help them continue to scale up. We also have a public-private partnership project that's coming up in our downtown as well. So the town, and like I said, Mari and her group in downtown partnered with the Development Finance Initiative out of UNC Chapel Hill to create a potential public-private partnership that will be coming up here fairly soon. It will be going to market here fairly soon. And then the third is just really seeing some interest from a private development, one particular private development project that took a old historic building in our downtown and is now completely repurposing it. And one of the driving factors in that was opportunity zones and the ability to protect those capital gains. So we've actually started to see some redevelopment, some new development, some great projects come along, and in some part, if not fully, all because of opportunity zones.
That's great, Joe and Veronica. Thanks for sort of setting the stage for us when it comes to the development locally. And Jeannie, I'm really excited to have you on this panel to lend your expertise to that of Veronica and Joe's on the ground expertise and local flavor. And one of the things that regarding opportunity zone legislation, one of the initial goals was to create quality local jobs, greater community wealth, and stronger local economies. From your perspective, are those conversations still resonating with these goals in mind?
Well, thanks, Michael, for having me. And I have a slide actually to pull up as I talk through this. But one of the issues with the opportunity zone provisions is those are two very short provisions in a big, huge Tax Cut and Jobs Act. So it's great that we had these goals, but I look at things from a community economic development standpoint, and it's basically a tax incentive. So we have to figure out other ways to incentivize investors or educate investors as to how to go about creating those jobs and how they look after the community. So what I have up here is kind of in the middle 4 principles: synergy and balance, social equity and impact, transparency and collaboration. So what I'd say is you start with the community as a whole. I'm also a former mayor, so I think this is in Wake County, so I think this is critical, that you have to get the investors and the community on the same page. They need a vision, and that vision can't be a top-down. It's got to be a collective vision from everybody in the community that they buy into. You can roll that into a perspective, but if you can get the investors and the community to at least agree to these principles, you can then create some metrics, and we'll find out, does it really create quality jobs? You could do some community benefits agreements. Is this project going to adhere to these principles we've agreed to? And this is really how you get transformation, which I know Ashley said that was hopeful, but really what we're talking about in low income and underserved communities is equitable development. So to get to that, you need to get everybody on the same page and think about these shared principles. And there's some ways to do that. You can look at these partnerships. Joe just mentioned some. P2, also P3 brings philanthropy in, mission-oriented institutions, enterprise partners, LISC, universities, and looking at all the different types of funds. And then on the flip side with the cities, you can look at what's already in place, some heritage preservation. Raleigh has some heritage preservation for the African American community that coincides with the opportunity zone. District planning, Veronica mentioned transportation, zoning overlays. So these are all the tools, and what we need to do is get the investors and the community on the same page, talking about the tools, talking about the principles, and then we can go about creating this vision that'll have the outcomes that we're really looking for.
Well, with that in mind, Veronica and Joe, let me ask you this question. Based on what Jeannie just told us, let's make an assumption. Let's say that that's occurring in both Garner and Raleigh. In our community, those conversations are occurring, and the way in which these different parties are coming together and collaborating is so important. So in your minds, in your communities, what's the ideal? What does the ideal development or the ideal transformation look like utilizing opportunity zones in Garner and Raleigh? Joe, I'll let you go first this time.
Sure. Well, I think one of the things that we're all facing, right, is just a complete lack of affordable housing. And whether that's affordable or workforce or whatever word you want to use, the fact of the matter is it's getting more and more expensive to live here in our community. Even in Garner, which has been historically a place that has been very naturally affordable, continues to see the pricing of housing and real estate rise at a rate that is probably beginning to reach a point where it's unattainable for many folks, many lower socioeconomic folks. So one of the things that we are really excited to see is more of that affordable workforce housing. Specifically, we mentioned the Amazon project that just opened this past Sunday, thank goodness, after 2 years. But seeing affordable housing developed near that, so that you're able to have families and folks live closer to their job, where maybe they don't have to rely on a single car to get to work. They can walk or ride share or whatever it may be, take public transportation. So it's really trying to keep a focus on who we are as a town of Garner. Historically we have been, compared to other neighboring communities, kind of lower on the socioeconomic ladder and more diverse, and that's been one of our strengths, and something that we want to keep our fabric here in our community, much the same, and still have that hometown feel. And so making sure there's a place for everyone here has been a big piece of that. So definitely seeing the affordable housing parked alongside of job opportunities that have kind of that, we talk about all the time, Michael, is the job matrix, right? That has the ability to see an employee come in and actually work their way up or even work their way out of the company is really exciting for us. And then, of course, seeing that coupled with public transportation. And I think that's, the other thing that's really big for Wake County, and specifically for Garner, with BRT, with potential of commuter rail. We've even expanded our own bus services here in the town of Garner, just to try to make sure we're encouraging and accommodating those folks who want to take public transportation.
That's great. Thanks for that, Joe. Veronica, I'd love to hear sort of your ideal development or investment in an opportunity zone.
To be honest, it doesn't matter. In some ways, it doesn't matter what community we're talking about. Values and assets and what's important, it's just very similar. I could actually say ditto to Joe. Definitely, jobs, location, where people don't have to be car dependent. Particularly, we really want to move away from 2 and multiple car households. If either one of the 2 projects I talked about that, are in opportunity zones in Raleigh, both of the developers are talking about the high value of the transportation infrastructure. That's just an absolute win for them. The location is so strategic as well for the community, that the city's commitment to equitable development, we want to be in partnership with both these projects, because we want a high quality of life anywhere someone lands in our city. We don't want a zip code to determine someone's rate of success in life or success in health. We want to hit that head on. And I think these 2 projects could be transformative in that way, making sure that those communities are actually full service. Healthcare resources are in walkable distances, grocery stores, that we're not creating more food deserts, but rather looking comprehensively at community engagement and community development, which also includes entertainment, amenities. There's nothing worse than, due to my economics, I don't have access to taking my family out or an affordable evening out. So we definitely want our projects that anywhere across Raleigh, but particularly our opportunity zones, to live into the values of the program was built around. And many we heard from Joe speak about, just reiterating high quality of life, accessibility, amenities, health and wellness. And so far, both of the projects have been very engaging with the city, and we welcome that.
That's great. And Jeannie, I'm going to bring you in, as you mentioned, your time as mayor here in Wake County. I'd love to get your thoughts on what you see as the idealized development in an opportunity zone, especially based on your chart which was focused on equitable economic development and equitable development. I'd love to let you have a bite at that apple as well.
Yeah, so I think, when this passed, there was a pretty long span of time before regulations were final. So we had quite a bit of a delay. And then for the most part, a lot of attention's focused on real estate and not on the business side of the equation. Those regs came out quite a bit later than the real estate side. So I think for me, if you start thinking about really equitable development, we want to look at who's coming in with their funds to do real estate. Are their supply chains equitable? Are there things the cities could do with their ordinances to encourage equitable supply chains? So it's great, you're going to improve a site, you're going to improve some real estate, but you can bring other entrepreneurs, other businesses in by having some of those ordinances that encourage an equitable supply chain. So that's one way to start to create jobs in the project. And then the second piece is, what are these businesses going to be that go into these real estate projects? So we have the pandemic that's come in, and we see a migration from some of the larger cities to some of the mid-size or smaller cities, which could impact cities in Wake County. So real estate projects, what kind of businesses could we bring in? If we have businesses where people are going to be home-based, are there other types of business ventures that we can pull into this real estate? And I know from talking to small businesses in the Triangle during the pandemic that we have a lot of businesses that are really skeptical about more debt, rightly so, and they're also skeptical about equity in terms of bringing somebody else in with this equity investment. So I think we have a lot of education to do with businesses about all kinds of tools in the toolbox that they could be using. They could be looking at small business investment companies. They could be looking at really foreign investment through the EB5 regional investment centers. So I think we need to do a lot of work with our business community, saying here's all the tools in the toolbox. Here's how they may or may not fit. It may be the business model. Maybe we should look more at cooperative businesses or employee-owned business models and have those conversations with the investors and look at all the tools in the toolbox to start to build that business vibrancy within these opportunity zones, as well as the housing and the real estate projects.
Yeah, go ahead, Veronica.
Thank you, Jeannie. You inspired me. I remembered another piece that we really want to leverage in our opportunity zone. And one of the two developments I talked about is already reaching out. There's two HBCUs right here in Raleigh. We imagine the opportunity of bridging our HBCUs into the developments, either as providing job training, educational hubs, and innovation centers for our colleges and universities in the area. I'm sure our downtown South partners would be open to that conversation as well, but our New Bern Avenue partners they've already reached out to the universities to say, we want to have a medical focus on this campus. What programs and disciplines do you offer that would leverage this location? That's just a real exciting component here.
Yeah, thanks.
Absolutely, Veronica. That dream of having St. Aug's and Shaw have some gateway to the city is still top of mind.
I love it, and that's part of what this conversation's about. I think, Jeannie, you just hit it on the head. This notion of, like, again, that's why I asked the question, is like the idealized version or the dream that we have for our communities is so important. So let me ask this. I know we're gonna transition into a Q&A session here, but I'd love to ask maybe one or two more quick questions. And again, to our audience, keep sending in your questions. We're getting great questions that we're gonna be able to ask all of our panelists here momentarily. But what I'd like to get from the three of you is, one, for Veronica and Joe particularly, sort of what advice would you give investors or property owners or entrepreneurs, part A, and part B is how best can they communicate with you, with town and city leadership about any plans or that they may have?
I'm happy to take that first. What we like at the City of Raleigh is for any of our projects to let us know, contact the Office of Economic Development and Innovation, share with us your thoughts or ideas in or out of an opportunity zone. We just really enjoy knowing what projects are taking place, what type of investment is happening. If we could be a partner in helping to weave synergies and resources, different conversations that folks know about each other, we absolutely want to play that role. So we want folks to come forward and allow us the invitation to be a part of that planning and that thoughtfulness. The caution I would share with folks, I think some people believe opportunity zones is a local government plan. And we heard in the first panel, it could be a very complicated tax, attorney type conversation. We want the businesses to get the right counsel. What are you trying to achieve? How do you fund it? Once those ducks are in a row, and that plan is in place, and there's some kind of gray time, right? Like you can't do everything in a silo because we negate the whole P2 and P3. But we also want to be clear, the city is not driving the opportunity zone opportunities. We are a partner alongside businesses and investment and innovation. So we definitely value that the projects would have community conversations. If we could be a partner in helping to bring the community together, have those community conversations, build shared vision, hear what's needed. And something I'm really excited about, the folks with Downtown South, they've already identified the need for a community facilitator. That's part of their plan. It's part of their, they've actually put, Jeannie, I was glad to see it on your slide, they've put community benefits agreement. Is that a tool? They're asking us that question. Ask those questions of your local government partners. We want to explore that with folks. And then to see what the ways that a project may fit with our current incentive programs. But so just moderating some expectation about who's the driver with an opportunity zone and how local government can show up as a partner. We definitely want to do that.
That's great. Joe, love to hear your perspective on that type of advice.
Yeah, I would agree with everything Veronica said. I think, the earlier you can bring us on, probably the better. My job is to help facilitate development, good quality, positive, long-lasting development here in Garner. So, one of the things that we try to do is know about sites and opportunities out there that aren't on the open market. So there's a project that developers wanting to kind of evaluate, give us a call, let us know what you're wanting to do, and we can kind of help you find either a right location or maybe avoid some of the landmines, or just try to take out the risk and the uncertainty in the process. Kind of what we try to do. And then I think too, it kind of helps us understand exactly what they're trying to accomplish and if it is a good fit for us. Not every project is a good fit for Garner, like it isn't for any other city, but we want to have those conversations early on and see how we can best partner with the development community to achieve those community-based resilience. So the earlier the better. And then finally, just making sure folks understand the process and getting the help they need to make these things come together. They are complicated. So
yeah,
we would encourage them to have a good CPA and an attorney and a good team behind them before they try to get into something like this.
Yeah. So Jeannie, so I'll let you close this out. What advice would you give investors or other people interested in opportunity zones as they work with their local community?
So I would first say that, and I think Ashley pointed this out, there's so many resources in the federal government that people are unaware of that can leverage opportunity zones. So from U.S. Economic Development Administration to SBICs at the Small Business Administration. So I would say, first of all, to investors, take your time, look at all the tools that are out there and how you could use them. Absolutely, you want to talk to the local government, and you want the local government to bring that community that it's going to affect into the conversation for that transparency, for the collaboration, for the collective ambition of the community so that everyone knows what you're thinking about and they can actually help you formulate your project. On the flip side with the businesses, if I could wave a magic wand, I would have given much more lead time to this program so that we could educate investors, the regular public, business, and local government in a much more sequential fashion. But I'd say for the businesses, they also need to come up to speed to see what options are out there and how they could benefit from this program. And we need to really facilitate, and at this time we have to do it virtually. We have to facilitate as many of those conversations as we can. But our goal is equity and our goal is resiliency. And we know we have a pandemic. We know we're going to have more pandemics. We know there's been an upgrade. There's now going to be 24 named storms, 12 hurricanes, 5 major hurricanes. We know that affects us in Wake County. So we have these series of events, and all of this thought process into development needs to take that into account. And the best way to do that is by having these conversations with everybody at the table.
That's great. Well, thank you all so much for the incredible conversation. I'm excited. We're going to continue the conversation. We're going to have a round robin, full panel Q&A session. So I'm going to invite all of our speakers to join us, and we're going to have a lot of people on the phone here. So I'm going to ask each of our speakers if you can mute yourself, and I'll try to facilitate questions. But if you want to be able to add something, please wave your hand. So I'm going to ask Charlie and everyone, Karen and Ashley to rejoin us now. And we've gotten some great questions. Again, if you have a question for this wonderful group, please use that question function, and we're going to start asking some questions. So I'll ask first. I think, again, thank you all for this. Charlie, here's a question that we got. Charlie, I'll start with you, and anybody else has any insights here, please feel free to jump in. But Charlie, one of the questions that we got was why existing property owners in opportunity zones are having difficulty taking advantage of it.
Yeah, so one of the requirements for property to be qualified opportunity zone business property, which is the property that has to be owned substantially or in substantial proportions by the business or the fund, is that property be purchased from an unrelated party after 2017. And so that causes problems for people who owned property in an opportunity zone before 2017, because they are going to have a lot of difficulty getting that property into a business that they own and control. So a related party in this context is what you would assume is a related party, someone, an individual you are related to, but it's also an entity that you own at least 27 or 20% of. So if you're going to own property now, or you own property before 2017, if you want that to be in an opportunity zone business, and you also to have a continued role in that business, you're going to have to sell it to an entity that you own less than 20% of, so you can't control it anymore. And so that can be very difficult. And most property owners don't want to give up that control, right? That's why they called you, to see how they can turn this into a project that can benefit them. Now, the other thing they can do is sell that property to somebody else who's going to do an opportunity zone investment. They will have generated capital gains and then invest in other property, right? So they can take advantage of the program. It's just going to be very difficult to do that with property that they owned prior to 2018.
Charlie, one of the things that we've actually seen be effective is an additional strategy on that is actually leasing it. So they don't get the full benefit of being involved, but if they need to do a ground lease on it, that's one of the ways that we've seen people that own in the zone be able to effectively kind of stay in the mix. So
right, yeah,
it's not an ideal solution by any stretch, and so you got to get creative on it, and unfortunately that's the case. But at the same time, it does encourage people to actually transact, which is what we wanted to have happen.
And I'll add to that. I mean, when people are disappointed when they find out that they can't do things directly like they wanted to, but the first thing you have to tell them is congratulations, your property value just went up because it's in an opportunity zone. So it would be nice if they could participate fully with that property, but at least their investment went up.
Yep.
They could buy the land next door and reinvest their proceeds, just like you said.
That's right.
But don't cross-sell. Don't buy yours and have your neighbor buy yours, because the IRS does not like circular transactions.
That's good advice. Ashley, I'll
Right.
ask you a question. Well, again, thank you, Charlie, for that. That's a good. Was good. That was one of the first questions that came up. I'm glad we were able to answer that for our participant. So, Ashley, I'll ask you a quick question. Is related to the Municipal Opportunity Zone funding. The question was, how much traction have Municipal Opportunity Zone funding management organizations gained? What are you seeing nationally?
So I think that there's a couple of places that have done it really well. So like Opportunity Alabama has had massive success on attracting private capital into their, to the areas, in Huntsville and other places that they've identified. And, they were in the game early. They committed, they were all in the game early. They had hired a designated person that went on a trail where he was doing road shows all over the place. And as a result, they've gotten a lot of national attention. I know that Louisville has actually done a fair amount of, attracting capital into their stuff. There's also a couple of places in Idaho that I've seen. I don't know, it's kind of weird about how it's kind of all over the place, but, and I think that that's the key, is that the places that have made a concerted effort to organize their resources, tap available federal resources, look at what state resources are available, and then marshaled all of those together, those are the ones that have probably had the most success. And, I won't get into the North Carolina exempting out of 1400Z, but the states that have had state, government assistance and, backing it up, so Louisiana announced another tax credit for startup entrepreneurs, as did Ohio. So they've got state incentives that are kind of coming alongside of the federal program. And those are the ones that we've seen, kind of have the most success. And the key is, and once again, it kind of goes into that spark, is that it starts people thinking about it. It's news stuff, right? And then you use that news in order to get people's attention and to funnel them into folks like Karen and what their projects are. You funnel them into the economic development people, and it's a way for you to be able to get in touch with people that otherwise wouldn't be happening.
Yeah. Which, one of the things, Ashley, that you mentioned that I think is a great takeaway from that is that there are many examples of what success looks like. So it's not just, dependent on a specific geographic area of the country or a specific type of zone. Like, oh, well, the really good ones are all, 5 miles from a major urban center or something like that. But what you mentioned, the varying locations that you've mentioned, large urban areas, small urban areas, rural areas. So that's a good thing for us, both in terms of our municipal leadership on the call, but also for investors to know that they can look to other places for that type of example of success. And Karen, I'll ask you something, and this was a question that came in, and I think it's an important one because this is a concern a lot of people have regarding opportunity zones when it comes to potential displacement or something is. And so the question is this: how do we avoid top-down development so we don't displace or price out residents while developing amenities such as new housing or entertainment districts and the like? So how do we ensure there's not this top-down development?
Okay, so that's a very good question. When I think about that, you think about the fact that some of the developers have had land and they've come in and they've been developing where they have opportunity, where they can make a return and their investors can get a return. So, so I think what it has to happen though is that cities, municipalities have to kind of step up and say, hey, if you're going to develop in our opportunity zone, we want to know that you're going to provide housing for people that live there, or you're going to employ people that live in that zone, which is one of the requirements, but that we want to really discontinue displacement. To me, I feel like it really has to come from the city or the county. The locality is really kind of pushing in on that to stop the displacement. Unfortunately, with the program, you're going to see right now that a lot of the projects are happening right at that kind of intermediate zone, right? Those areas that have already started gentrification, where there's investors and developers see, wow, there's a great opportunity for appreciated value in the future because it's already started. So I think that's what we're seeing first. So I go back to the fact that I think it really means that localities and cities have to come in and say, hey, you can do this here, we'll help you out. Some, like Seattle, has seen a lot of new tall buildings going up. That's probably creating some gentrification, but they also provide a tax abatement that says, hey, if you provide 20% of the units for people at 80% or 30 at 80, then we'll help you out a little bit more here. So I think there has to be that partnership there to make that work.
Yeah,
but it is
Veronica,
an issue. I agree.
Thank you, Karen. Veronica and Joe, any, that I know in your comments, you mentioned the need to sort of engage the community. I wanted to give you an opportunity to sort of weigh in on that, how to avoid the top-down development.
Yeah, so I think it, kind of reiterate what everyone else has said. I think that's been one of our biggest concerns, right? Is changing the fabric of our community too quickly or in a negative way. And so really for us, it's been trying to strategically place those housing opportunities, the affordable workforce housing opportunities, in close relation to job opportunities, so that we can help avoid this type of gentrification that's going to occur. I'm sure there's going to be some of that as it's naturally occurring right now, and has been in Southeast Raleigh, our neighbor right up the street, for some time. So we know that's coming, but it's really about trying to protect assets, work with the developers to help them understand why it's important, and what it means to the community, and then trying to figure out strategic locations that it can occur. And that's kind of gets back to, if you're our developer, please contact our office. Let us know what's going on so we can help, not necessarily tell you what to do or where to go, but maybe put some opportunities in front of you that maybe you didn't know about, and try to make those connections between employment centers, housing, public transportation, Veronica said entertainment, grocery store, things like that. Try to make it to where we are developing opportunities for lower socioeconomic folks that they don't have to worry about being priced out of the market.
I think another thing that local government could do is also lead by example. So where we have infrastructure and assets, are we as a developer looking at our supply chain? Are we looking at our own investments that are next to, or also in an opportunity zone or next to some of these developments, that we too are looking at housing? Are we looking at our own practices to make sure that we are not inadvertently spurring gentrification, but that we have practices in place to help folks stay in their neighborhood?
That's great. Thank you for that. I know for both of you, that's a really important aspect, the community engagement. I'm glad, Karen, we got that question. And I think it's important for us to think through. Jeannie, I have a question for you that's coming from the audience, and it's a really good one. You mentioned public-private partnerships that include philanthropy, and this question is related to that. What are some good models for this in North Carolina or other places, and what role does philanthropy play in a successful partnership like this?
Well, there's some great examples, and just adding on to what was said earlier, there's some smaller city examples where I'd use Rock Hill, South Carolina, as a case study of where they've created an innovation district and have some really interesting partnerships taking place with the city and investors. But in terms of philanthropy, early on in this process, two large national philanthropies, Kresge and Rockefeller, issued an RFP for funds to put together opportunity funds that would be job creators and use those metrics that I talked about. And there's been a round of projects funded through that where really the foundations are providing that loss guarantee for those investors that go into that fund. There's a second round going out now for cities to take a look at. So you've got some large foundations that have done that. And then if you zoom in regionally, there have been some other collaborations with foundations that were able to put together vehicles like that to help spur this. Aside from that, philanthropy should have a seat at the table with the business and the investors as well, just because they could be investing in the programming that takes place. So we were talking about business development. You could bring the philanthropy in. They may end up being an equity investor with returns. They don't have to be in the opportunity fund. So that would be a way to bring them in. And we didn't talk about the fact that there are a couple of banks that, while banks don't generally have capital gains, we do have two banks that have opportunity funds, and those funds are social impact funds. So both PNC and Wood Forest have social impact opportunity funds. And again, just layering and leveraging with the Community Reinvestment Act and the other tools. These are things that philanthropy does all the time. So they definitely could be an anchor in a lot of these conversations.
Hey, that's great. Thank you for that. That's a good example. Again, more examples for us to look at, I think is important. Charlie, I'll ask you a quick question to sort of to close us out. We've talked a lot about job creation and economic mobility today, and here's a question. What type of permanent jobs can be created using Opportunity Zone funding? Just maybe a clarifying question there for the audience.
Yeah, any job that could be created with non-Opportunity Zone funding. I mean, the Opportunity Zone business is just a business that the dollars are taking advantage of a tax benefit. But I mean, any type. I mean, you could have the most obvious example that we see are real estate-based businesses. Restaurants, apartments, commercial rental spaces. But you could have an operating entity. You could have a startup company that goes into an Opportunity Zone, hires employees. You could have a manufacturing plant. You could have, there's a example in the regs about a landscaping company. So really anything that would create a job outside of Opportunity Zones could be put into an Opportunity Zone project as well.
So that's great. Again, it's the breadth of the opportunity that's in front of us, I think, is important. Well, hey, everyone, thank you so much for participating in the Q&A, and really quickly to the audience, great questions. One of the things we're going to do at the conclusion of this is you'll be getting a recap blog from us with a recording of this, and we'll share everyone's contact information that's participated in this, because I know I wish we had more time. There's so many great questions, but we want to be able to make sure those questions get answered, and we'll have, like I said, a recap, sort of talking about some of our key takeaways, but also sharing more information for our great panelists. So again, that concludes today's conversations, but I'm going to give out a couple quick thank yous. Number one, thank you for this amazing group of speakers and panelists. This was great. I loved this conversation. I loved the direction that we took with it, and you led us on. Really talking about transformation, talking about partnerships and impact, and that's so important for our community. And again, sort of seeing what the future could hold in Opportunity Zones is really important. So thank you for that. Hey, thank you to our participants. Thank you for joining the conversation. Thank you for the great questions. It was awesome. And again, we're going to follow up with all of you about that. And then a real quick thanks to Bridget and Danya, Bridget with Innovate Raleigh, Danya with Wake County Economic Development, for helping organize this conversation. Again, thanks to all of our participants for sharing your insights and your expertise. As you know, my normal operation is I have to end with a couple takeaways, so I'll do that. Some of the things I learned today that have really been exciting for me. 4 quick ones. 1, OZs equal opportunity. So Opportunity Zones are a chance to leverage significant sums of private capital to benefit low-income community residents and small businesses that have been historically neglected. The Opportunity Zone initiative has the potential to be a powerful catalyst for stimulating long-term economic growth and investments in parts of our community that need it most. And that's something that we've heard a lot about today. Second, community interaction is important. This program has the potential to transform communities and lives for the better, but there's always a risk for displacement when that happens if not done thoughtfully. So it's important to ensure that residents' voices are always a part of the process. Third, entrepreneurs, innovators, and their investors have the potential for adding tremendous values to the zones, like Ashley and Napoleon's are facilitating along this path. But I think it's, again, what's exciting, what I heard Ashley talk about was it's Main Street, it's innovators. Charlie talked about any of these jobs can find their way in an opportunity zone. And in our community, entrepreneurs and the innovation ecosystem are such an important aspect of it and can really drive continued growth in this space. And then finally, the equitable toolbox, and we heard this in our last panel. The opportunity zone is but one tool in the economic development toolbox that can aid in a strong and equitable recovery from the COVID recession. Opportunity zones should be leveraged to help build more wealth for everyone involved: developers, investors, entrepreneurs of color, and underrepresented groups within the zones. So some couple of quick takeaways. Again, we hope you found this discussion and the presentation informative and walk away with a better understanding of the benefit of the opportunity zones and the transformational power that they have. If you're interested in learning more about opportunity zones in Wake County, please visit our opportunity zone resource page. Please also visit the City of Raleigh's opportunity zone page. Please visit Garner Economic Development's page for more information. And we've already shared a link in the chat box for you. And as I mentioned before, in the coming days, you're going to get a recording of this conversation along with a blog recapping today's event, as well as the contact information of our awesome panelists. So with that, I'll say thanks and have a great day. And thanks everyone for your participation.
Cheers, everybody.